Hello, everybody. It's Mark Johnson, and Happy New Year again. Today is January the 12th, and interest rates are up just a little bit over the last week. Overall, the average has been 6.64, and yesterday's reading came in at 6.66. Let's look at the actual chart here. As you can see, it's 6.66, and you can see that it's been coming down and coming down, and then the 30-year just came up just a little bit right here over the last week. Like I say, it's gone up about 0.04 of a percent. The 15-year mortgage actually has gone down just a little bit more. Let me just take you to the charts real quick and show you what is going on here. So here is our bond market right here. Let's see, for some reason it's not letting me drive the ship here. But anyway, hopefully you can see this here on our screen. I hate it when it doesn't work out so well. So the bond market where we buy our money today ended up unchanged. Yesterday, you can see this trend line coming down and down and down over the last week or so. And I don't know why, really, because there hasn't been a lot of bad economic news, but there hasn't been good economic news that would move the markets until yesterday. And I'll go through that in just a minute here. And then yesterday, even though the CPI number didn't come out really great, we did have a rally at the end of the day. And then today, it just kind of stayed the same. And it could be that maybe there was some comments made by one of the Fed chairs, and I'll go through that here in just a minute. Let's look at the 10-year Treasury, and you can see that it kind of popped up here, and then now it's starting to go down. We had a triple level of support right here, which just held interest rates up here, and now we see that interest rates are starting to come back down. So hopefully we'll see a movement in rates during the next week, and that'll be good for for people who are getting ready to buy and lock in rates. The next slide that I just wanted to show you here is the this consumer price index, the CPI, and you'll notice here that we're looking at a raise in the headline of 3%, or 0.03%. They went from it was 3.4%, and it came up from 3.1%. And you would think that would have a negative effect on interest rates, and it did just a little bit in the beginning. But the core, basically, that went up too as well. It was 3.9, now it's 4.0. And the main reason for this is you're looking at shelter costs right here. These are home prices. They're still going up. They went from 6.2%, from 6.5. So it came down just a little bit. Rent still increasing, so it was 6.5. And it came down from 6.9%. And you can just see overall insurance on cars, that's going up, and energy. And part of the reason why energy is going up right now is because what's happening in the Red Sea with the Yemen strikes. Sorry about that. Anyway, my advice right now is if you're looking to lock into rate, maybe wait. It's a holiday weekend, so it's always a little bit dicey to wait between now and Tuesday because Monday the markets are closed. My thought is if it was me, I would probably just see what happens on Tuesday and either lock first thing in the morning or just continue to float. I probably wouldn't lock today on a loan that I had in process, but that's up to you, and hopefully you're getting great advice from a loan officer. If you're serious about zero down for vets, we don't charge any origination fee or lender fees for VA loans. And if you want to get your loan approved in one day, we have a same-day mortgage for our conventional loans with as little as 3% down. All right. Have a great weekend, and we'll talk to you soon.